As of today, Thursday, December 25th, 2025, the U.S. stock market is closed for the Christmas holiday, but the most recent performance for Micron Technology Inc. under the ticker MU shows the stock sitting at a robust $286.68. During the final trading session leading into the holiday, we saw a massive upward swing of $10.41, which represents a 3.77% gain on the day. This price point isn't just a number on a screen, it's a reflection of a company that has effectively rewritten the script on how memory manufacturers are valued in a landscape dominated by artificial intelligence. While many investors were distracted by the usual headlines surrounding Tesla stock or the latest incremental update to Apple stock, Micron quietly climbed to a level that few expected a year ago. The common narrative suggested that memory was a commodity business, prone to the same old boom and bust cycles that have plagued the sector for decades. But the reality we're seeing in the numbers is something else entirely. Micron has managed to decouple itself from the traditional PC and smartphone cycles, pivoting instead into the high-margin world of high-bandwidth memory that powers the most advanced data centers on the planet. Think about the standard expectation for a company like Micron. Most people looking for investment help or exploring various investing sites tend to view memory chips as the boring part of the computer, the storage bins that get cheaper every year. The reality, however, is that without Micron's HBM3E and the upcoming HBM4 technology, the high-performance GPUs produced by others, like NVIDIA stock, would essentially be Ferraris with no fuel. This creates a fascinating tension. The market expects a peak soon because that's what historical patterns dictate, yet the current order books for Micron are reportedly sold out through 2026. When you have 2 years of guaranteed high-margin revenue locked in, the old rules of cyclicality start to look outdated. If you're using an individual brokerage or a platform like the Robinhood app to manage your own self-investing, you've likely seen the volatility that comes with these high expectations, but the underlying strength here is driven by a structural shift in how data is processed, not just a temporary spike in demand. Recent market activity has been nothing short of intense. Leading up to this holiday break, trading volumes for Micron surged as institutional players rebalanced their portfolios for the new year. We've seen significant activity across major platforms, from those using the Fidelity trading platform to those conducting online investing through interactive brokers. The sentiment is leaning heavily toward the idea that we're in a supercycle. This isn't just a buzzword, it's a tangible financial reality evidenced by the company's gross margin expansion. Not long ago, Micron was struggling with margins in the low 20s. Now they are pushing past 50%. This kind of profitability is typically reserved for software companies, not hardware manufacturers with massive overhead and fabrication plants. When you look at your SOFI active investing account or check your positions on the Fidelity mobile app, you're seeing a company that has successfully moved from being a price taker to a price maker. They are commanding premiums because their tech is currently the gold standard for AI infrastructure. Many people who use Schwab Intelligent Portfolios or SOFI robo-advisors might not realize that their diversified portfolios are increasingly weighted toward this semiconductor strength. The ripple effect of Micron's performance is felt across the entire tech sector. For those navigating the world of online investment through a Fidelity brokerage or Robinhood stock trading account, the question always becomes, is it too late? This is where the gap between expectation and reality gets really interesting. The expectation is that the easy money has been made given the stock's triple-digit gains over the last 12 months. The reality is that we are seeing a fundamental re-rating of the entire industry. If Micron can maintain these margins while their competitors struggle with yield issues on the newest memory stacks, the current valuation might actually be conservative. It's a bold claim, but the data on data center capital expenditures suggests that the demand for memory is growing at a faster clip than the demand for processing power itself. Micron Technology isn't just about the latest AI craze, though. To understand the full picture, you have to look at their broader business model. They are one of the few remaining giants in the DRAM and NAND flash memory space. While they've recently made headlines for exiting the crucial consumer business to focus on high-margin enterprise clients, their footprint remains global. They design, manufacture, and sell a wide range of memory and storage products that end up in everything from your car's infotainment system to the smartphone in your pocket. Historically, their performance was tied to how many laptops were sold during the back-to-school season. Today, that part of the business is almost a side note compared to the massive contracts they are signing with cloud service providers. This shift in focus is why you see such high conviction from analysts on platforms like Interactive Brokers Trading, and why Fidelity wealth management experts are keeping a close eye on the sector's supply constraints. Let's talk about the future outlook, because that's where the real opportunity and the real risk lies. In the coming months, we have several key catalysts. First is the ramp-up of HBM4, which promises even higher bandwidth and lower power consumption. Second is the potential for a recovery in the more traditional PC and smartphone markets, which have been stagnant. If those markets start to pick up while the AI demand remains white-hot, we could see a supply squeeze like nothing we've seen before. However, the risk is always there. Memory is still a capital-intensive business. Micron is spending billions on new fabrication plants in Idaho and eventually New York. If the demand for AI infrastructure even slightly cools off, that massive capital expenditure could become a weight around the company's neck. This is the tension every investor faces when using an individual brokerage or checking their Robinhood investments. Are you betting on a permanent shift in technology or a temporary bubble? I want to hear what you think about this shift in the semiconductor landscape. Comment below how many shares of Micron Technology you currently hold, or if you're looking to pick up a position in the new year. It's always interesting to see how different people are approaching this market, whether you're a long-term holder in a Fidelity IRA or a more active trader using the Robinhood app for fractional shares. Your perspective on whether the memory cycle is truly dead or just on a very long pause is what makes these discussions valuable. We're seeing a lot of retail interest through the SOFI trading platform and similar investing sites, and it often provides a different view than what the institutional desks at Interactive Brokers are saying. The institutional activity has been particularly telling lately. We've noticed a trend of smart money moving away from some of the more overextended software names and into the picks and shovels of the AI hardware world. This includes not just NVIDIA stock, but the critical memory components supplied by Micron. For someone managing their own self-investing via a Fidelity brokerage or SOFI Invest, seeing this rotation can be a strong signal. It suggests that the market is starting to value tangible hardware and manufacturing capacity more highly than speculative future software earnings. This is a complete reversal of the trend we saw a few years ago, and it speaks to the reality of how much physical infrastructure is needed to support the digital world we're building. For those of you using Schwab Intelligent Portfolios or SOFI Robo-Advisor, you might notice that your exposure to the semiconductor sector has likely increased automatically as these stocks have grown to represent a larger portion of the total market cap. It's a testament to the sector's dominance. Even if you prefer a more hands-off approach to investment, the performance of MU is likely impacting your bottom line. The current price of $286.68 is a far cry from the lows we saw during the supply chain gluts of 2022 and 2023. Back then, the expectation was that it would take years for the industry to clear out excess inventory. The reality was that the AI explosion acted as a massive vacuum, clearing out the old stock and creating an immediate need for much more advanced, high-performance chips. Looking ahead to 2026, the guidance provided by the company remains incredibly aggressive. They aren't just predicting growth, they are predicting a fundamental expansion of their total addressable market. When you use tools like the Interactive Brokers platform or the Fidelity mobile app to dig into the earnings call transcripts, you see a management team that is confident but also cautious about managing their supply. They don't want to overbuild and crash the market like in previous years. This disciplined approach to capital expenditure is something that long-term investors in Fidelity mutual funds or those holding Fidelity ETFs appreciate. It shows a level of maturity that the memory industry has often lacked in the past. It's about sustainable growth rather than just grabbing every dollar on the table as fast as possible. As we wrap up this analysis, let's look at the core of the expectation versus reality dynamic. The expectation was a cyclical peak followed by a sharp decline. The reality appears to be a structural shift toward a higher baseline of demand driven by a technological shift that requires exponentially more memory. Micron has positioned itself right at the center of this change. Whether you are doing your online investing through a Robinhood account, managing a complex strategy on the Interactive Brokers trading platform, or just starting out with self-investing on SOFI, the lesson here is clear. Sometimes the boring hardware stocks end up